to you. Okay, all right, Sonia, thank you so much for joining us and giving us the list of all the stocks that are moving around in the mid-cap space. With that, let's move on. NIIT, that's the stock on our radar, posted a mixed set of Q1 numbers. Margins, they have declined, but revenue growth was strong. Mr. Vijay K.Thadani, who is the Vice Chairman and MD at the company, he's joining us now to discuss the earnings fine print. Mr. K.Thadani, good afternoon. Thanks a lot for joining us, sir. Well, this time around, there has been a sharp decline in margins. However, your revenue growth has been very strong. Considering FY23, what is the business expectations? Where will this growth come in from? And what is the margin band that we can target?
Yeah. So if you are looking at, just to comment on the margin part, in terms of our overall margins, I think they were within the range that we had anticipated and had guided for. I think you're perhaps referring to profit after tax. And in the profit after tax, we have two technical adjustments. One, primarily one actually, which is the mark-to-market loss that we had to take in our treasury income this quarter, which is actually not, it's a non-cash entry, but nevertheless. And in terms of the EBITDA margin that we are looking at from last year, 23, to this year decline, that decline actually was anticipated because last year, this quarter, we had mentioned that there was an unusual increase in a certain activity. So overall, the EBITDA has still increased. I think given the current situation where there are rapid changes in the macro environment, as well as there is a increasing global uncertainty, I think we have to look at our business in the overall context. In this particular quarter, we did see some small volume drop, volume drop in a small number of customers, and we believe that that's a change which is to do with the economic environment, which will take a couple of quarters to recover from. But after having done that, we believe that the second half of the year, we will be back on track, and we are therefore continuing with our overall guidance for the long term of one of the businesses, that is CLG, to be in the 20 to 25% growth. This year, there may be a small impact because the shortfall that we have right now in this quarter will take, I don't think we'll be able to recover all that in this year itself because this uncertainty continues. But over the longer period, I think we will be back on track. And on margins, we are on guidance and will remain on guidance. The skills and careers part, which is the India side of the business, I think has done much better than anticipated and is also growing very fast. That's also a place where we have been brand leaders. We have a right to win, a very, very strong brand requirement, as well as the large opportunity that is emerging, where India is becoming the talent hub for the world, and we see that business growing as per the projections that we have of more than 50% revenue growth. Of course, our continued investments in sales and marketing will reduce the impact of that revenue growth, and therefore at a margin level, we may be at break-even this year on that business.
So, Mr. Thadani, just to summarize,
substantially better than last year.
Corporate Learning Group growth guidance is 20 to 25%. For skills, the skills and careers growth is seen at over 50% for this year. And margins will be above 20%. That's the guidance you gave us last time.
Yeah, so I'm repeating what I just said. The Corporate Learning Group will go through a couple of quarters of depressed growth. And therefore, for the year, it will not be able to make up to the 20% that we anticipated at the beginning of the year. However, since this growth will be back in the medium to long term, which is the next year and the year after that, we continue to remain on 20 to 25% guidance. That's what I said.
Mr. Thadani, so we always ask you this question. You've been talking about how digital is growing well. It accounts for around 15% of your revenues. How much can you scale it up to? And are you looking at any value unlocking? There is a lot of stuff happening in the edtech space and in the digital space generally.
Yeah, so as you know, we have been looking at various inorganic opportunities, and last year we did make an acquisition. Even now, we have a strong balance sheet, and we are looking at attractive opportunities which will emerge, because many companies, very contemporary companies in this field, are at this point of time likely to be available at cheaper valuations. So we would therefore be looking at inorganic opportunities. The value unlocking in the business is already on schedule in terms of the demerger of the two businesses into two entities. A scheme of arrangement for which is already with the government and is on schedule. So next year, same time, thereabouts, based on what we can see and past experience, you should be able to be talking to two companies, the NIIT Limited and NIIT Learning Solutions Limited, and I think that will itself create great opportunities for value unlock.
Okay. All right, Mr. Thadani, it was a pleasure speaking with you. Thank you so much for joining us and giving us all those details. That's the commentary coming in from NIIT Limited. But we do have a stock which is in focus, and in our